Good evening, future Maryland homebuyers. Thank you so much for being here. My name is Jackie Muick, Advocacy and Communications Administrator for Maryland Realtors. I want to welcome you to the Your Home Buying Keys webinar. Assembled tonight, we have experts in the industry. With us is Courtney Pleiss, a realtor with the Pleiss Group of eXp Realty, Aaron Fink, a lender with Mortgage on a Mission, Jim Hall from Freddie Mac, and Catherine Kramer Dale and Frank Bamunde from Maryland Department of Housing and Community Development, also known as DHCD. Tonight, you will get an abundance of information to help you navigate and succeed in your home buying journey. This webinar will be recorded and sent out to all attendees after the conclusion of the webinar. We encourage your questions and we're looking forward to answering them. Please post all questions in the Q&A box below at the bottom of your Zoom screen. And with that, I'll turn it over to our realtor member, Courtney.
Thanks, Jackie. Give me 1 second. Okay. Hi, everyone, and good evening. Thank you so much for taking the time to join us. And we are so excited that you're here, and we're excited to be here to help you on your home buying journey. So as Jackie said, I am a licensed Maryland realtor and a local expert, and here to help provide some general information. So what is the home buying process like? How do you begin? So first, you want to talk and interview a realtor. You want to find someone who connects with you, someone who's responsive, who gets your humor, who's knowledgeable, someone that you connect with, because it is a very long and intimate journey to find your first home. Then you're going to want to get pre-approved for a mortgage. There are a lot of different programs out there that you may be qualified for as well. So your first 2 steps is finding the realtor and getting pre-approved for the mortgage. And then we go out and we find you your home. After we find your home, we'll help with writing the offer and negotiating, and no 2 homes and no 2 offers are exactly the same. So we're looking at the specifics of what you need and what that seller needs and trying to create a happy unison for you both. We'll complete home inspections, the paperwork, and then it's settlement day. You get to own your home and move in. Let's see. Here we go. What are some of the benefits of home ownership? Homeowners and home ownership helps to build equity and also your wealth. It's a savings device because every month you're paying down your mortgage payment and also while automatically saving as your equity in your home goes up. And there's also stability with it. So you have fixed monthly mortgage payments, when if you're renting, that could fluctuate year over year. It also has some tax benefits. So I would advise you to talk to a tax consultant about how to maximize those benefits. You also have complete control over the design of your home, with the exception of what you do to the exterior if you have an HOA or a condo association, but you can paint, you can renovate, you can style and design your home to truly make it your own. It also helps to build a deeper connection with your community. Homeowners feel more connected to their environment and their community as a whole. The market, everyone seems to ask, what's the market like right now? And truly that depends on what county and what town you're living in, because every county is a little different. So you'd want to find your local realtor to help you with your specific neighborhood or neighborhoods that you're looking for. But in general, there is still lower inventory, which means there's high competition still for buyers. So it's really important to have that team around you to support you and help to guide you through the process so that you can make the most competitive offer on the home of your choosing. Interest rates are fluctuating right now. Again, another reason to stay in direct communication with your lender. And a prepared buyer wins homes. So having trust and a connection with your team We're your advocates. We want you to win, and we want to win right alongside you. So staying in contact with your team will help you get into the right home. Once you're under contract and you found your home, do you need a home inspection? Right now, with there being a competitive market, you might have heard some people talking about whether to or not have a home inspection. And I say always have a home inspection. Purchasing a home is your largest investment of your life. And it's worth having a home inspection to know and uncover any hidden problems that even the sellers might not know about the home. It also helps to protect your investment. You know, if you move forward with the purchase, what you have in store for you, what repairs, what maintenance, what you have to do to maintain and upkeep your home. When the home inspector comes out, they will give you a home inspection report. And sometimes they can be kind of thick, but it gives you a lot of how to be a homeowner. What do I need to do every year? What do I need to look for? What do I need to fix right now in the home? And if it does happen to be some issues or some items that need attention right away, during the home contract, the purchase period, your realtor can help you negotiate for either a credit or a repair towards some of those items. How long does it take to buy? So once you have your pre-approval and you are ready to go out and see houses, it depends really on how long it takes you to find that perfect house. But when you do find that house, the house that's right for you, and your contract has been accepted, it's typically a 30 to 60-day settlement period from when both buyer and seller agree to all of the terms of the purchase to closing settlement when the keys are given over to you and that new home is yours. If you are taking advantage of a grant program or a first-time homebuyer program, which will help with closing costs, those do take a little longer. So again, it's important that we stay in direct contact and communication with the lender. We're a partnership to help make sure we're getting a settlement period that is long enough to allow for funding of that grant program. And then if you're having the inspections and the appraisals, those can also affect timing as well. But that is accounted for when we are setting the contract period of that 30 to 60 days. Some people might ask, when's the right time to buy? Should I continue renting? Should I buy now? What's the market doing? And truly, the answer is very personal to each and every one of us. And it's when you're financially ready. When you are ready, you've gotten your pre-approval, you're comfortable with the payments, you know whether or not you're going to have grant money or the amount of money it's going to take you to get into that home. And that's when the timing's right for you. No one's ever going to time the market. It's not about timing the market. It's purchasing the home when it's right for you and when that right home appears. So you can get your financing in order by talking to the lender and realtor. And then we're there for you when everything does fall in place for you and you're ready to start looking for a house. It is okay to start talking to your realtor and your lender well before the time when you start to go out to see houses, because we can help make sure you're doing all the right things and you continue to do all the right things to put yourself in the best position to get the most advantageous interest rate and the best terms possible for you when you do buy your home. What should I look for in a realtor? So there's a lot of realtors out there and we're not all created equally. So when you talk to and interview a realtor, you want to find someone that you connect with, someone who is experienced and a local expert for the area that you are personally looking for. Because as I said earlier, every neighborhood and every county and every market is different right now. Some are more heavily favoring sellers. Some are more heavily favoring buyers with the amount of homes that are on the market. So it's really important that you partner yourself with someone who knows the area that you're looking to buy in. And what are their negotiation skills? Are they able to communicate clearly Do you understand what they're trying to tell you? Do you think they're being an advocate for you and aggressive with their negotiations with a listing agent? You want to make sure that they're giving you guidance that you can trust. Do you feel comfortable with the advice? Are they giving you resources and connecting you to the proper professionals across our industry who can help you? And also another way, if you're not sure, is to look at reviews. Take a look at the realtors that you've talked to, read the reviews, see what other people who have worked with them are saying about them. And you can also ask your friends. Sometimes people who have previously bought a home would be happy to tell you who they used and what a good experience they had with their realtor. Here's my contact information if you have any questions. A little bit about me. I am the team lead of the Place Group of eXp Realty. We're licensed in Maryland and Pennsylvania. I service the Baltimore County, Harford County, Baltimore City, Cecil County, and Howard County areas. So the north central part of the state. But if you're looking anywhere else in the state, I'm happy to help connect you with some local realtors in that area so you can start your interview process. I'm so excited you're here. I'm excited for you to be on your home buying journey. And if you have any questions, here's my contact information. Feel free to reach out. Thank you, Jackie.
Awesome. Thank you so much, Courtney. All right. So we already have some questions coming in. One person asks, do you know what it's like specifically currently that market in Wacomico County?
I don't. If you can get my contact information, I can connect you with an agent down there who does.
That'd be great. And
You're
also a
here.
note for all attendees right now, all of our presenters tonight will be CC'd on the follow-up email I send out. So if you're interested in following up with any questions, say like we sign off today and you have something that just hit you you really want to ask, you will be more than able to do so. All right. We also want to ask you really quick, Courtney. First-time home buyers have to manage a lot of expectations, both from family members and for themselves, trying to figure out what their first home is going to be like. How do you, as a realtor, kind of manage those expectations as well as the wants and the needs of your clients?
Great question. So when we first sit down with our clients and we're interviewing with a new buyer, we're asking them their wish list. What are their must-haves? What are your wish list? And we're planning it out. You are going to have a lot of advice. Everyone is really excited for you in your life. Family members, coworkers, friends, people are very excited for you, and people are going to have a lot of advice. But it's not always the most current and timed with the market. So again, when you choose and interview your realtor, you want to make sure it's someone that you have a good connection with, and they will help you with navigating through that and not only provide guidance, but can provide statistics and facts to back up what they're saying in the market.
That's awesome. Thank you so much, Courtney. All right, I'm not seeing any other questions coming in the chat currently. So if you have questions for Courtney, she's going to be able to stick around until the end. So feel free, put your questions in that Q&A box, and we'll come back to them later. But for now, we're going to move on to our lender for the evening, Erin.
Jackie, let me get and share queued up here. Everyone can see that, right?
Yeah.
Thank you. All right, everyone. My name is Erin Finke. I am a loan officer with the Mortgage on a Mission, and this is an amazing first step for everyone on this call. Being, eager and hungry to learn information that's going to help make you successful in home buying is an excellent indication of your preparedness to purchase a property. And I can absolutely echo a lot of the sentiments that Courtney mentioned, which is about being prepared, doing your research, working with professionals that you jive with, right? So having someone who's, a warm referral is great, and someone who, is highly reviewed, someone that you click with, because it is an incredibly unique experience purchasing a property. And, it can be considered, this transaction, right? It's just business, but something that I do think has been missing for many years, from the mainstream conversation when purchasing property is the emotional element of it. So going through all of these things, what you qualify for, what programs are available, what are your fears, what are your desires and goals, doing that before you start touring property, that's generally my motto. We want to have the time to be thoughtful and proactive in going through all of the things that make up the why and why you want to purchase a property. So let me start off here with my presentation. Speed it up a little bit here. All right. So you've decided to become a homeowner. What do you do first? More than 98% of Americans who buy their first home need a loan to do that. So understanding what options you have to be pre-approved for a mortgage is just so incredibly important because it's going to be completely unique to you. So I always say step one is to get qualified. Figure out a few things. Number one, obviously, what your budget is. What amount of money monthly are you paying right now? And what is the maximum level of comfort that you have for payment? And sometimes these numbers, what you're paying currently and what your max budget is, they might be the same number or they might be different, but going over those on the front end to understand what capacity you have is so important. Because I think, you've seen advertisements that say, get qualified for a mortgage, and, it's on the internet and it's just put in this information and it says, oh, you're qualified. Just because it says you're qualified doesn't mean that you're going to be comfortable with that monthly obligation. So working with a lender who is going to really look out for your level of comfort and help you understand what that means. So it says here, your monthly housing budget, the maximum you're comfortable paying each month, and also understanding programs that can complement your purchasing goals. So we know of several first-time homebuyer programs, especially the Maryland Mortgage Program, have some incredible offerings for making home ownership possible. And what that looks like is down payment assistance loans that make the cash that you need for closing less than if you weren't doing a down payment assistance program. So that can look like having down payment and closing costs, a portion of them covered for you. So of course, when you're speaking to a lender, you're also going to be discussing, the maximum amount that you qualify for based on your unique personal data. So what does that mean? Things like your credit score, your monthly income, your debt to income ratio, which, to kind of go into that a little bit further, is where when we discuss what you qualify for, it's based on what your current obligations are divided by what your current monthly income is. And that gives us a percentage. And different loan programs allow for different percentages in what we call a debt to income ratio. And, we'd go over all of that information on the front end to not only know what you qualify for, but again, more importantly, where you should be purchasing as far as loan amount in order to be comfortable with that monthly payment, taking into consideration an all-encompassing housing expense. So principal and interest, which is the amount that you borrow plus the interest that you pay, property taxes that are specific to that home, insurance based on the size and type of property, mortgage insurance, which is based on a couple of different things, including down payment and credit score. And of course, if a property has an HOA or a condo fee, we want to take that into consideration. So again, we know exactly what that housing expense looks like for you. So also when speaking to a lender, you're going to be discussing, what your credit looks like and understanding how it plays into what loan options that you have. So step two is when you actually get past that first initial step of speaking with the lender is completing an application. So this is where you submit your personal information through either a phone call that the lender takes information over the phone from you. You're very, specific to you, your name and date of birth and social security number, to your residential history, to your employment history. And you submit the documentation through a portal, through a secure email, so that the lender can review all of these pieces of information that you provided to be able to put that next to all of the other requirements for being qualified for a mortgage. I like to describe a mortgage as the top of a table. If you imagine a table with 4 legs on it, the mortgage itself is the top, and then you have these spokes that hold it up. And if you take out one spoke, it's not gonna hold up the top, it's gonna topple over. So one spoke is your credit, and then one spoke is your income, and then another is your debt, and the other one is, the different qualifying items that might be particular to you, whether it be credit events or detailed employment history, so on and so forth. All of these things have to work together to hold up that mortgage. So submitting your employment history, income details, all of those things, again, specific to you, and so important. Being transparent with your lender is so incredibly important. The more that your lender knows about you, the better they can help you. And I do think that when you're interviewing lenders, you're going to know in the first, few moments or minutes, if you feel like you have an advocate or you feel like maybe you're not really driving. And I say that because I think it's important to say, just like every real estate agent isn't, made the same, neither is every lender. So I do think that following your gut in that capacity, but also working with someone who you can trust and you feel like you can be vulnerable with, because this is a very unique experience. Step 3, and this is where it gets exciting. Once all the details are determined based on your max budget and the loan pre-approval details that are unique to you, you're ready to begin touring property. But before that, we want to loop everyone together. So getting with your real estate agent, all of us either on a Zoom or a phone call, to go over your goals, your loan option details, as well as timelines. Courtney made a great point that different loan programs have different timelines on them. So setting that expectation of understanding, like, yes, we have all these options. Here's how we need to curate this offer in order to make that happen. And all of us working for you together as a team is incredibly important. Okay, this is something I'm really passionate about. So we work with something called a total cost analysis, where we put side by side some examples based on different programs. So let's say you're looking at 123 Main Street, and we're discussing 3 different loan options. If Courtney's taking you out to see those properties, I want you to have the numbers in front of you, in the palm of your hand on the app that we provide, so that you know exactly what it looks like going into it. You know exactly down to the penny what your monthly payment will look like, as well as down to the penny what funds you need to prepare for at closing. Because it's never any fun. Surprises are fun, but not when you're buying a house. You want to have the information on the front end. So understanding your budget and what that gets you for a house prior to you touring homes, I think is, again, so important. So, home ownership and the goal of home buying, it's such an exciting time. And, one of the most important pieces of not only being approved, but, getting to the closing table is feeling heard, feeling seen, and knowing that if you have questions, you know that you have a team in your corner to do that. And I want to encourage and support everyone on this call that you've made it this far, understanding that you can ask the questions and advocate, and we can advocate for you. It's about the professionals that you're working with, and again, being having your interests front and center. And that's all I have, Jackie.
Thank you so much, Erin. Awesome. All right. We have a question in the chat, but it's actually one that I think we'll get to in the next presentation. So we're going to hold off on it. But one of the things I wanted to ask you, Erin, is credit scores are so important to the home buying process. What are some key things that you would recommend future home buyers take a look at or just keep in mind when it comes to their credit scores if they know they want to buy a home in the next year, 2 years, couple months?
Yeah, that's a great question, Jackie. Thank you for asking that, because I think a common myth is that you have to have perfect credit to purchase a property. I don't really know anyone with perfect credit. So what I would give as a suggestion is understanding what accounts you have, keeping record of things, whether they're car payments or student loans or credit cards, whatever they are, having record of them personally and keeping track of, obviously, making payments on time is the most important, because if you make your payments on time, you will have a good credit score. If you don't make your payments on time, your credit score will go down. That doesn't mean if you haven't made a payment on time that you can't buy. It means you might have a lower score, which might limit your options. But to add to that, there's also some credit simulations that we can do to help homeowners who maybe have less than perfect credit. I need a little guidance on what to do to get it a little higher.
Awesome. Thank you. And another thing that, especially with interest rates kind of being in flux a little bit right now, points are something that I feel like as someone who bought their first home last year, I did not know about until I was like talking to my lender and we were like running through those different scenarios. Can you talk a little bit about what points are and why they might help some first-time home buyers?
Oh, another great question. So just as a foundation, when you purchase a property, let me see how to explain this easily. When you purchase a property, the market rate for the day is what I would call a par rate, meaning it's a rate that exists and doesn't cost you anything to get that rate. So generally, a market rate is what is offered because it doesn't cost you anything. But you can take a below market rate if you decide to pay more in fees to get that rate lower. That's what we call a permanent rate buy down, meaning you're buying down to get a lower interest rate for the term of your mortgage. And yes, that's something we would always address to make sure we were getting into the comfort zone for monthly payment, and to also look at what the delta is between the monthly savings that you'd have if you paid a point and what the recoup would be. How many months of savings to recoup the cost of paying those points. So it's not for everyone, but it can be an excellent tool to get to a comfort zone of monthly payment.
Yeah. Yeah, agreed. Thank you so much, Erin. All right, I'm not seeing any other questions coming through, but Erin is also able to stick around for, oh, never mind. Okay, we got one. We got one.
Okay.
Jim, we'll come to you in a moment.
Okay.
Uh, what is the criteria for being a first-time home buyer, in terms of grants and different things? Um, this is coming from an engaged couple with respective last home purchases in Maryland in 2020, 20 and 2001. Is either long enough to reset the new buyer clock?
Great question. So it depends on who you're asking. The state of Maryland in itself, meaning when you come to Maryland and you purchase a property in Maryland as a first-time home buyer, you are exempt from the state transfer tax when you're purchasing in Maryland for your first time. It's a one-time thing. However, after not owning a property for 3 years, 3 most recent years, you can qualify for a first-time home buyer program, even if you've owned a property. That was 24 years ago, we're talking about 2001. So that person would qualify as a first-time buyer because they have not been on the title to a property in the most recent 3 years.
Yes, the date and the 3 years is from when you stopped owning a property, not from you bought the last property.
Correct. Yes.
Yes.
Most right.
Yes. Okay, awesome. Thank you so much, Erin. All right, Jim, take it away.
You
Okay. Well, thank you, Jackie. And as always, I appreciate the invitation to speak to consumers in Maryland. Maryland Realtors is doing a great service for you folks that live in Maryland. I can tell you that this isn't being done in any other state. So they're bringing you this important information on the home buying process and the mortgage application process. So I'm Jim Hall, and I'm with Freddie Mac. I'm a senior affordable lending manager, and I can assure you, Freddie Mac is not a person. He's not some Scottish guy named Frederick Macmillan. Okay, we are a government-sponsored enterprise. We're a mortgage company, but we work in the secondary market. So we're not in competition with Erin. We don't make loans directly to consumers. Okay, what we do, we provide liquidity into the market. So we create mortgage programs, and then companies like Erin use our mortgage programs to service individuals like yourselves. And then we purchase mortgages from companies like Erin and also the DHCD, the Housing Finance Agency in Maryland, to keep the lending cycle going. So it's a really important process. But again, it's necessary. And then with what we do with the mortgages is that we bundle them up into larger securities and put them into the investment markets. And again, that's where we make money, and then we're able to purchase more loans. So with that being said, we have 3% down programs, Home Possible, Home One, and specifically the HFA Advantage program. And I'm not going to do a deep dive into that because Catherine and Frank will talk about that in more detail. But it's a program that Freddie Mac created for lenders like Erin to use specifically through housing finance agencies like the DHCD and the Maryland Mortgage Program. So what it does, it allows you to get a conventional loan at the lowest down payment possible, because standard conventional loans are 5% down or 95% loan to value. So with this program, we were able to reduce the down payment requirement to 3%, so it's a 97% loan to value. So it makes it more affordable. You don't have to come up with more money for down payment and closing costs. And we also allowed down payment assistance programs like the Maryland Mortgage Program offers to be put behind that first mortgage up to 105% loan to value. And those down payment assistance programs are very, very important, because if you qualify for them, that's less money that comes out of your bank account and pockets to put down. So again, Catherine and Frank will go over their down payment assistance programs more in detail. What I want to talk about is the importance of education. So I'm going to share my screen now, and the slides that I'm going to put up here will Jackie is going to send them all to you. So you will get a copy of these slides, so you don't have to jot all this information down. And Freddie Mac created the Credit Smart program. And why we did that is because education is one of the major pillars here at Freddie Mac. Not only industry education, where we raise awareness with our lending partners and realtor partners, but educating consumers. So Credit Smart is a financial literacy tool for you, the consumer. And this is a free program. So you're going to walk away tonight with a program that isn't going to cost you anything, but you really can't put a dollar value on it because it's not measurable. You're going to gain knowledge by going through Credit Smart. So the Credit Smart website address is on this first slide here. Our program has been around for over 20 years, and it's very interactive. It's multilingual, and what it will do is help you understand the home buying process and the mortgage application process. So if I can use the old adage, knowledge is power. So, when you're going into this, this decision you're going to make, it's probably the largest and biggest financial decision you're going to make in your lives. So, when you're conversing with your realtor, hopefully it'll be Courtney or one of her colleagues. And if you're conversing with your loan originator, hopefully it'll be Erin or one of her colleagues. You want to be able to understand, what they're talking about, and so that you can, discuss items, with them. And that's where Credit Smart will help you. And I'll go to the next slide here. So what we did, we broke it down into two sides, one being financial capability and one being homeownership education. The financial capability side is really the essential side. And that's for you to really, keep through your whole homeownership journey. You'll be able to rely on this information if questions come up. And the homeownership education side, which we call Home Buyer U, that is for the immediate process. That's with, working with your realtor and your loan officer. Again, the essential side is, really focusing on financial goals and learning about credit, money management, and other key topics. We modernize this to where you can personalize your own dashboard. You can track your progress. You can have a notebook, you can set goals and earn badges, and it has pause and resume functionality. So it's not something where you have to sit down and go through all these modules in one sitting. Like I said, the essential side is for you to have for your whole home ownership journey, and it's very interactive. And I'm on slide 4 now, and this gives you an indicator on the essential side on what it would cover. So it will help you understanding what goals are and how to set them, the importance of earning and spending wisely. Again, building your credit, eliminating debt by being a savvy borrower, planning to save. You heard, Erin and Courtney mentioned about budgets. It's very, very important to set a budget because, it's exciting to buy that house, and it's exciting to get your mortgage approved and your mortgage closed on that house. But once you put those keys, in that lock for the first time and you open that door to your new home, there's a lot more to it than just getting a mortgage and buying the home. You have to furnish it. You have to get items to maintain the yard. And you just have to be prepared. And also, in that planning to save module, it's very important to anticipate. Now, I can remember, when my wife and we bought our first house, and that was back in 1990, so it's 35 years ago. But I remember to this day, my father, telling me, Jim, okay, you need a rainy day fund. And I didn't know what he was talking about. I was like, Dad, what's a rainy day fund? And he said, well, things are going to happen, okay, where you're going to need quick cash and you're going to have to take care of things. So you need that little nest egg there to be able to access that. And I was thinking, okay, well, he just doesn't want to be my quick cash person. And, he doesn't want me to come and ask him for money if something happens. But no, but seriously, he was like a prophet because our first 2 years of home ownership, my wife and I came home from work and our water heater went and flooded the basement, and our basement was partially, renovated, so it ruined the carpet. But I did listen to Dad. I had some quick cash. I had that rainy day fund. I was able to clean up the mess while I put in my homeowner's insurance claim. And so that's just an example of, things you have to think about and anticipate by being a homeowner. And the final item here in the essentials part is prepare and protect. So again, it's fantastic to get that mortgage, but you have to be able to maintain the monthly mortgage payments, because the last thing a mortgage company wants to do is foreclose on a property. It's a lose-lose situation for everybody. So you do what you can to make your mortgage payments, and by making your mortgage payments, you're gaining wealth, you're gaining equity in that property. So it is also not only a dwelling that you're living in, but it's also an investment for your, for your future. So again, Credit Smart Essentials, can play a really, really important role for you to understand, what home ownership is all about. Now, the home buyer you section, this is for the immediate part. This is for when you're working with Courtney and Erin. Okay, this is only 6 modules, and this will take you 2 to 3 hours to do. And again, it does have the pause and resume functionality. So if you need to pause it, you can do that. But once you're finished these 6 modules, okay, you have to pass a test and achieve 80% or higher. And by passing that test, you get a certificate, a diploma that meets national industry standards for homeownership education and counseling. It's good for 12 months. Okay, so, if I'm sitting in Erin's seat, I'm your loan originator, and I've given you the advice to go through the Credit Smart program, and you did it, you passed, you got your diploma, I know it's go time. I have to get your mortgage approved now, and I got to get you to the closing table because you're ready. And again, this Credit Smart program is free to you. It doesn't cost anything, and you can do it all, where you live right now. You don't have to go to any location to take it. It's all done online. So with that, like I said, Jackie will be sending you these slides, and hopefully, you'll sign up for Credit Smart, and it will help you on your path to homeownership. So I am done sharing my screen now. And Jackie, you said there was a question in there pertaining
Yeah,
to
we had
education?
someone ask about home buyer education, but they specifically were asking about HUD certified home buyer educations.
Okay, well, any type of education in our industry is great. So if you want to choose a HUD counselor and do a sit down or a phone, interview with them, um, you know, that's fine also. And you can do both. Again, the HUD counselor may not cover something that's in Credit Smart and vice versa. So by all means, if you want to go to a HUD counselor, you know, uh, you know, we have no problem with that. But again, Credit Smart doesn't cost you anything. It's free information, free knowledge, and please take advantage of it. And again, you made a wise choice by tuning in tonight for Maryland Realtors, because you have some great professionals like Aaron and Courtney here sharing information. And then we always close strong with Catherine and Frank. So so stay tuned.
Yeah. The important thing is that as a first-time homebuyer, especially, you get some kind of education. Freddie Mac is a great option. HUD is great. Um, I know I definitely took the Homebuyer U, and I highly recommend it. It was great when I was going through buying my home. But yeah, thank you so much, Jim. We're gonna move along, and we're gonna go straight to the Maryland Mortgage Program. Catherine.
Hello, everybody. My name is Catherine Kramer Dale. And yes, we saved, I don't want to say the best for the last, but we saved where all the money is. So I'm going to share my screen. Just give me a minute. Share. One. Having a little difficulties here.
That's all right. You are sharing your screen.
Yeah, okay. Is it pulling up? Let's see. It's acting weird. What is the deal here? Let's try it again. Sorry. Try it one more time. There we go. Everyone can see it, right?
Yes, we can.
Okay, perfect. All right. So you've talked to the real estate agent, Courtney, and you have an idea of where you want to purchase a home. And then you talked to Aaron, and Aaron is from one of our top performing lenders that is approved to utilize the Maryland Mortgage Program. And Jim shared with you some great information from Freddie Mac. Well, now I'm with the State of Maryland Department of Housing and Community Development. And our state program is available for those that need some down payment and closing cost assistance. Now, normally I don't have this long to talk, so I'm kind of excited, but this is our website. It is www.mmp.maryland, maryland.gov. And this is what the homepage looks like. Anybody can come in here. You don't have to have a secret password. When you're on this home page, you're going to scroll over to where it says Professional Portal. And you're going to scroll down and you're going to see a man with a pair of glasses and it says Program Information. Because a lot of you have asked some really good questions, I just want to share with you before I show you the programs. In order to be eligible to come and utilize the Maryland Mortgage Program, you have to apply through one of our approved lenders. And we have Erin on here from Vela Mortgage. She's amazing. So you've got your agent, you've gone to Erin, you've gotten your approval, and now you let Erin know, hey, listen, I have some money saved, but I don't have a lot of money saved. and I have good credit and I meet all the guidelines, but I want to make sure that I can take advantage of any money that is available to me in the state of Maryland. Well, under this program information screen, there are a list of items that your lender will look at. When you're using the Maryland Mortgage Program, you have to be a first-time home buyer. So those of you that are on the call, you would just ask yourself, have you ever owned a home? Well, if you haven't, you're a first-time home buyer. Or, like Aaron mentioned, if you haven't been on a deed or had any interest in a property for your primary residence in the last 3 years, we consider you a first-time home buyer. So if you haven't been on a deed in the last 3 years, you are considered a first-time home buyer. If you're a veteran, if we have any veterans in the house, if you are using your VA exemption, your VA exemption certificate, we will ask for proof of your DD 214, and we will also make sure that you don't own anything anywhere in the world at the time of this closing, but we would consider you a first-time home buyer. Or the lender, Aaron, would go on this thing called the mapper. And I'm not going to pull it up, but they would pull up this mapper right here, Maryland Mortgage Program Mapper, and they would type in the property address that you're interested in purchasing. And if the property shows up that it's in a targeted area, woohoo, you're a first-time home buyer. So you don't have to meet all 4 of those. You just have to meet one of them. Then we have income limits. So it's not for low to moderate income. So a lot of people think, oh, I make way too much money. I'm not going to qualify for a handout with the state of Maryland. This isn't a handout. This is a program to help you purchase your home utilizing funds from the state of Maryland. Go into the income section. Open up the income chart, standard income, and we look at household. So Aaron's going to ask for your pay stubs and your W-2s and your tax returns, but then let's say you're buying in Anne Arundel County. We're going to ask not only who's on the loan, but we want to also know the income for anyone else that's living in your home that's 18 years or older. So if you have people in Anne Arundel County purchasing for 1 to 2 people, if it's not in a targeted area, which the lender will tell you, you're capped at 124.5 for household income. If you are purchasing in a targeted area, which again, Aaron will let you know if the property's in a targeted or not, then you can go up to a maximum household income of 149.4. If there's 3 or more people, this is the maximum income. I noticed somebody on there asked about Montgomery County. Montgomery County, look at these income limits. So don't think, oh, you make too much money or you have too much money coming into your household. For anyone on the loan, living in the home that's 18 years or older. Okay? So then we're going to get out of this and we're going to go back into the Maryland Mortgage Program. And then we're going to talk about assets. So if you have a lot of money, why are you coming to the state to borrow money? So with assets, you cannot have more than 20% of the sales price of liquid assets. That's like your checking, your savings, your CDs, your stocks, your bonds. We don't count how much money you have in your 401 or retirement. So don't worry about that. You could have a lot of money saved in there. Only liquidity. So if you have more than 20%, then you don't qualify because you don't need us, right? And most people who come to us are people who need down payment assistance. So the assets aren't usually an issue. Then I had somebody also ask about homebuyer education. Well, when you do the Maryland Mortgage Program, we do require that you take a homebuyer education class. And the homebuyer education class can be any class approved by HUD, Fannie, or Freddie Mac, right? Jim from Freddie Mac. So Jim was correct in saying you can use any local HUD approved housing counseling agency. When you click on this, it gives you a list of all the agencies that you could certainly register to take a class in a classroom setting. Or there's national industry standard agencies that you could certainly click on. But guess what? Even way before the pandemic, You can do it online in your pajamas with a cup of coffee. So you could do it with Arch, HomeView, Hope, Essence, Framework, MGIC. Once you complete any of these following homebuyer education courses, you get a certificate. The certificate will be in your name, and the certificate has a date on it. The date is valid for 12 months, 1 year. Now, not everybody in your house has to take this homebuyer education. So if you have an adult child or you're caring for grandma, they don't have to take it. Only the borrowers, so like mom and dad, or the borrowers on the loan. That's homebuyer education. Then Aaron, the lender, is going to go through your credit report and your income, and they're going to calculate that you have to make sure that you are meeting our credit score guidelines. So we have this thing called the product matrix, and the lenders know that the credit score, in order to qualify to get money from the Maryland Mortgage Program to help you with down payment and closing cost, you have to have a credit score of 640 or higher. If you're doing a conventional loan, which again, the lender, Aaron, will guide you as to whether it's beneficial to go conventional or government, but just remember 640 is the lowest. And you could go up to a debt to income ratio of 50. If you were doing FHA via USDA, the range for the credit score is no lower than 640, but it's from 640 to 679. You're at a 45 DTI. But if your credit score was at 680 or higher, they'll let you go up to 50%. So you guys, I just went over the 6 eligibility guidelines in order to qualify for the Maryland Mortgage Program. Are you a first-time home buyer or not? Making sure you don't exceed our household income, making sure you don't exceed our asset guidelines, completing home buyer education requirements, the DTI, debt to income ratio, and the credit score. So if you qualify for the Maryland Mortgage Program, then when you go on interest rates right here, you will see all of the amazing programs that the state of Maryland Department of Housing has to offer you. If you're not a first-time home buyer, but you meet all the other 5 guidelines, you could still do the Maryland Mortgage Program. You could still get $6,000 from us or 3% of the total first mortgage. But let me remind you, when you apply for the Maryland Mortgage Program, you have to meet those 6 guidelines, right? But you can't own anything anywhere in the world at the time of this closing. And the purchase of this property has to be for the intent that it is your primary residence. You have to be living in it. This is a fixed mortgage and it's a 30-year mortgage. These are the rates on the rate sheet for your first mortgage. So you're looking at like 6.5, let's just say, or on average 6.5 to 7% is the interest rate. The money that you're borrowing from the state of Maryland, whether it's $6,000 or 3% or 4% or 5%, or maybe even possibly 6%, that's the percent of the total first mortgage, round down, no change. This money that you're getting from the state of Maryland is a loan. We don't charge you any interest rate on that loan, but we record it as a second lien. And when you sell or refinance the house, you pay back the first mortgage, and then you have to pay back the loan that you borrowed from us. It's not a grant. It's not forgiven. It doesn't magically go away. It's not like if you live in the house for so many years or stay in the program for so many years, it just is forgiven. If you borrow $6,000 from the state to help you through the Maryland Mortgage Program, you have to pay it back when you sell or refi. Now, I know somebody asked specifically about Montgomery County. Montgomery County has a program that is our product. So the Maryland Mortgage Program is partnering with Montgomery County. And if you are an employee that works for a particular Montgomery County agency, your lender will advise you that there's a form that needs to be completed from the Montgomery County division to verify that you work for a Montgomery County agency. And guess what? Hold on tight. You're going to get $25,000. It's a loan, It's a loan. If you sell your house, you got to pay it back. But that's $25,000 to help you get into your home. Then we have another program called the Maryland Smart Buy. The Maryland Smart Buy will help you purchase a house, get down payment assistance if you need it, but we will also help you pay off your student loan debt. So if any of you, I could talk for hours, but it's 7:26. If any of you on this call say, hey, Catherine, you know what? I want to apply for the Maryland Mortgage Program. We have Erin on here. She's one of our top performing lenders. You have to go through a lender that's approved with the Maryland Mortgage Program. When you're on our website, www.mmp.maryland.gov, you can go on the home page and you can scroll down here to talk to a lender. And when you click on this, it's going to ask you, what's your information? It's going to say get started, hit get started. And someone like Erin, who's one of our top performers, she may get leads from us. So anybody who fills this out, they will then, some of our lenders get leads because they're top performers, and they will get a lead and say, hi, John Smith filled this out and he's interested in buying in this particular county. Here's the best time to call him. How did he hear about us? Oh, through the Maryland Association of Realtors Home Buyers event. Check here and submit. And one of our top performing lenders will reach out to you to ensure that you qualify for FHA, VA, USDA, or conventional guidelines, but also that you qualify for the Maryland Mortgage Program. Now, somebody also asked about other programs. I'm the state of Maryland Department of Housing. So I'm telling you about money that you can use with the purchase of your home through the state. But every city or county also has a Department of Housing. They're on the city or county level. So when you talk to Erin or the lender that you're choosing to go through, you have to verify that they're an approved lender. Let them know that you want to tap into any money that's available in the city and the county where you're purchasing, and how do you qualify for that program. And you can also use money from the Maryland Mortgage Program. Get all these little buckets of money. All right. It's 7:28. I want to thank you guys very much for getting on this call. This is an amazing event that we do once a month. And those of you that are on here, you're serious. You are very committed to taking the next step. Please feel free to reach out to the Maryland Association of Realtors, all of the professionals that are on here. We want to certainly help you achieve the American dream of homeownership. Thank you so much and have a great evening.
Thank you so much, Catherine. We actually have another question I don't know if you've touched on yet.
Let's say
Someone
hello.
asked specifically
Oh.
about housing choice voucher program, but specifically disability programs. And
Yeah.
I know I've heard from you before that there is something that the home mobility program that I think it would be good for you to mention.
Yes. So that can probably, well, Erin can probably answer some of it and I can answer some of it. The Maryland Mortgage Program is a state agency program, and with the program that I just explained to you is the Maryland Mortgage Program. It's not the housing voucher program. But when you're using any other program out there, Erin can probably let you know how she can navigate that with a purchase of your home. But with the Maryland Mortgage Program, we do not have any grants, but we do have a program called the Home Mobility. And the Home Mobility product, we don't run off calendar year. So think about all the budget, all the money that comes into the government. We don't get our government funding in January. Our fiscal year starts in July 1st. And guess what, you guys? Homeowner month, woo! Homeownership month is in June. So you guys are on the call right at the perfect time. In June or July, we will roll out an additional program called Home Mobility. It's perfect for an individual that is either disabled or caring for a disabled individual, and you still get funding to help you purchase your home. But Erin might be able to also answer the questions about the housing voucher. Perfect. Go, Aaron.
There's Jackie, would you mind repeating the question as far as the voucher was concerned?
Oh, yeah, okay.
Yes.
Oh, go ahead. Well, it
Yeah,
says,
I got
hello,
you.
can you elaborate on using the Housing Choice Voucher Program? What income requirements are for a disabled person? How much assistance will I receive? Is there a time limit on the assistance? Are there additional fees in addition to the mortgage? And how does this affect the interest rates?
So this is not a Maryland mortgage program.
No, yeah,
As far as just like the housing voucher through like HOC,
probably, yep.
yeah, so lots of specifics with that niche program. So I mean, I can definitely get whoever had asked the question, definitely get in touch with me. And I can
Latasha Hamilton.
So Latasha, if you want to reach out to me, I can definitely get down nitty gritty with you on HOC housing, for that.
Okay. Jackie, do you want her to type her email in the chat box?
Yeah.
Okay.
Yeah, that'd be great. And
So,
also,
Aaron, I'm gonna type your email.
and also remember that Erin will also be CC'd. So if you want to follow up, you are more than able to.
Yeah.
But all right, I'm not seeing any other questions. So thank you all so much for your attendance. And as a reminder, our next Your Home Buying Keys webinar is on June 12th from 6:30 to 7:30 p.m. Please share that date with anyone you think would benefit from this information or another soon-to-be home buyer in Maryland. Be sure to check out marylandhomeownership.com for more resources and information on home ownership. We wish you all the success in your journey. And if you have any questions, please email webinar@mdrealtor.org. Thank you all so much. Have a wonderful rest of your evening.
Bye.
Bye.
Thanks, guys.
Bye, everyone.
Thanks for having us.